All right. Welcome back to another episode of the Real Estate Investing Club. I hope you guys are having an absolutely fantastic day wherever you are. As I mentioned, when we're recording this, it is the 20th of December. And so Christmas is right around the corner. So it's a great time to be alive. I love Christmas, my favorite holiday. It's also always a Friday here on the podcast. So we're bringing that Friday energy to you guys. It's going to be a good day because we have Michael Blanc with us on the show. He is a multifamily investor, over 40,000 units purchased or involved in. And so he has a lot of experience out there on the East Coast. Michael, I'm super excited to jump into this. Thanks for hopping on.
Gabe, great to be here.
Absolutely. I told you before we got on here, we always like starting with stories and hearing how people got to where they are. It always gives color to every investor that comes on the show. They always have this very unique story, and so I'm sure yours is I'm sure interesting as well. Why don't you take us to the beginning of your story in real estate and tell us how you got here?
Yeah, super boring. I grew up getting good grades and get a good job. Follow the process. I got a master's in computer science, so I'm highly educated, Gabe. And so I joined in the late '90s a software startup called Web Methods. Was in the right place, right time. One of the earliest employees. Went public in March of 2000, the biggest software IPO of its time at the day, and it was awesome. Put a bunch of money in my pocket, and then I read the stupid Purple Book in 2004, and it ruined my life because it threw me for a loop. And 3 months later, I literally quit my job,
Mm.
and I said, "Man, I need to get myself some financial freedom." So I kind of studied how money works, and I traded stocks and options, of course. Took a class there, took a commercial real estate investing class, and flipped a house or two for good measure. But my big idea was to get into the restaurant franchise. And long story short, as
Oh,
obviously
interesting.
in hindsight, not a great idea, but I bought a 10-unit territory, hired a guy to run it all, and it worked great until the recession hit. Then it no longer started working so great. And I'll make a very long story very short. I lost my IPO millions in the restaurant experience. Luckily, I had $200,000 of debt to layer on top of it to get myself out of that. It took vastly long amount of time to sell a restaurant that was losing money after the recession. Basically, it was a fast cash, all cash, fast close kind of situation. And so I was losing my shirt, lost my shirt, and then I tried to dig myself out with real estate because I flipped a couple houses in 2006 and seven, right before the recession.
Good
And
timing.
so I said, I need myself some income, so I'm going to start flipping houses. So I used hard money and then eventually started borrowing money, and we flipped about 3 dozen houses over the next 3 years until finally I woke up and kind of said, my gosh, this house flipping thing is very a lot of work. Very exciting, but a lot of work. It's really not really what Rich Dad Poor Dad talked about. And then I kind of accidentally got into an apartment building in 2011. One of my wholesalers brought a 12 unit to me in Washington, D.C. And I dusted off my commercial real estate, whatever seminar back in 2006. I said, yeah, I'll give it a shot. It was way harder to do, struggled raising the money. My house flipping investors didn't want to invest in a 5-year hold that didn't understand. So I had to start it from scratch, finally closed on it. It was a nightmare. I had a professional tenant in there, a complete, utter nightmare. Immediately regretted getting into multifamily. Finally, 18 months later, it finally calmed down and it was sending me $1,500 per month. And I'm, busily flipping houses. And that's when the light bulb went off. And so that's when I started to pivot away from flipping and really went into apartment buildings. And at the same time, a lot of people were asking me questions about how I found the deal, how I raised the money for it. So I was starting to blog. I started blogging on the Bigger Pockets for, I have like 151 articles on there, put up my own website, put out an analyzer, a course. And today we have an educational program where we teach people how to syndicate, raise capital, scale their portfolios. And then on the investing side, that company's called Nighthawk Equity, have about not 41,000 units, we have about 2,000 units. I think that 41,000 units are the number of units we help people buy.
Yes. Yeah, that you helped. Sorry,
They're
I
our
read that
students.
wrong.
So
Yeah.
I'd like to get the
Hey,
41,000
2000 is still, that's a good number.
So
So,
so there's a
yeah.
story in a nutshell.
Yeah, I love it, man. I love it. I mean, a couple things pop out to me. First, restaurant business. That is
Of course.
ever since I started getting interested in business and talking to people about it. That has been a consistent message: is do not get into the restaurant business.
Yeah, do not
What?
unless you really love food and
Yeah,
people.
yeah.
And I do love
Well,
people, but I could take it or leave it. It was a passive investment. And by
yeah,
the way, never invest passively in something that you may not, that you could see yourself possibly operating if it goes bad.
yeah, yep.
Never
Yeah, well, I
consider.
mean, it's also restaurants are one of those things. It's like it seems really nice to own. Like I love good
Oh
restaurants. I always
yeah,
go into them and I'm like, man, it would be really really cool to own this business
yeah,
and be
yeah.
the owner, come in, talk shop with the people running it. But
Oh yeah.
once you get into it, I'm sure it's hard. But you got out of it. I mean, you took your punches to the chin, and you got through it. You got out of the debt that you were in. We always love hearing those stories, and you got into multifamily. You mentioned you were doing flips. You realized it was more of a headache than you thought it would be. And then you got that multifamily unit and you started seeing that check, $1,500 a month. Once you see those checks, those a little bit bigger checks on a consistent basis on the commercial side, that is when, I mean, for me, the light bulb went off. I got a property and it was spitting out about 3,000 a month. And I was like, whoa, this is, 3,000 isn't something you retire on. But if you get it consistently, it is so much better than one check for $40,000. For some reason, just having that money that comes in every month, it's just much more, don't want to say relaxing, but it takes some stress off of you. So that's the moment. That's when you started to focus in on multifamily. Um, Once you made that decision, what were the first few steps you took to scale your investments?
Well, my scaling was a bit delayed. It's not like what we teach today, right? We have this. I have essentially a 10-year. It took me 10 years to figure this thing out. So people ask me, well, what did you do? I was like, let me tell you. I'll tell you what I did, but don't follow what I did, right? Do exact opposite of what I did. Follow what we essentially teach now, right? And so to me, the whole approach was very delayed because I was still trying to extricate myself out of the restaurants and I really felt called to actually educate people around it. So actually, I didn't do another deals for some number of years later. And then what happened though, and again, this is why my journey is a little bit different. Normally, in order to scale, you don't do what I did. What I did is I started blogging about it and getting on YouTube. And what happened is that people came to me and brought me deals. People wanted to invest money with me, and so I would say my scaling really didn't take off till 2017. So like in 2017, we must have done like 6 deals. 2018, we probably did another like 7 deals, all joint ventures with students, which was
Hmm.
good and
Yeah.
bad at the time. So again, my journey is not my normal journey, but typically what happens is when you buy that first deal, everything changes. Maybe you had that same experience. I call it the law of the first deal, which I talk about in my podcast and my book. When you do that first, close that first deal, everything changes. Everything becomes easier. And so a lot of people then simply, as they should, do the second and third deal, and they really get hooked. And then though, a lot of people make the mistake of simply repeating that process and simply, hey, how are you going to scale? They say, well, I'm just going to do what I did last month. Eventually, though, the wheels start coming off, and
Hmm.
or they are not as proactive as they should, and they can't take advantage of the opportunity. Or they
Hmm.
might say, yeah, this year I'm going to buy $20 million of real estate. Well, cool. How are you going to do that? How much money do you need? I don't know. Let me see. I think I might need 8, 9 million. Okay, cool. How much money have you raised? A million. Well, how are you going to raise $8 million? And they don't know, right? So there's a lot of this. Either they have no clue what they want, or if they do, it's a pie in the sky, and there's really no plan, no plan behind it. So I just find that as in scaling, and so we're advising a lot of people who do their first syndication around how can they now scale to, for example, 1,000 units.
Yeah. Yeah. Getting your first deal done, the skills it takes to get that first deal done and the skills it takes to take down a 100 unit, 200 unit property are vastly different. I mean, the benefit is it takes about the same amount of effort. I would say generally, it doesn't take a significantly higher number or higher amount of effort to close a bigger deal versus a smaller deal. But the what you need to be focusing on changes, and so that is I feel like that's the thing that people get held up on.
Well, on that note, Gabe, one thing that the fundamental thing that changes when you shift to larger or scale, and you just said it, it's not more hours or effort, but you shift your focus. And on that line, what I would suggest is that you got to focus more on building a team around you because your own ability, I mean, I can flip a house. Okay, I'll flip another house, right? And so my ability to actually scale that on my own is limited. Now we did 12 a year. That's pretty cool. That's pretty amazing. Awesome. Good for me. But if I wanted to, Grant Cardone 10x it, I'd be like, blah, 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 blah. Why would I want to do that? That's like insanity. I don't even want to think about it. But when you scale, like say with multifamily, let's say you do a 10 unit or something like that, and you're like, oh, it's pretty cool. I'm going to do a 20 unit. That's pretty cool. Let me do a 50 unit. The thing that changes is that yes, your comfort zone, your skills go up. But the thing I found changes the most is that you have a more of a who, not how mentality.
Mm.
By the book with Dan Sullivan, is that is if because right I a lot of people have a do-it-yourself attitude. They ask, how do I do this? How do I raise money? How do I do this? They should be asking who can help me do this thing? Who can help me raise money? Who can help me get deal flow? Who can help me get track record? How
Yep.
do I experience? Irrelevant question. Who can help me get the track record? So it's a completely different mindset, which I didn't know, I didn't learn for years. Now we're teaching people this exact mindset. So for example, if you don't have a track record, you're calling up a broker and you're buying whatever, a mobile home park, whatever, 5 acres, whatever it is, and they're going to ask you, well, what's your track record? And you're going to go, blah, 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 I don't have any. I flipped a bunch of houses. And I go, you know what? Talk to me again when you get some track record, right? Which is, of course, discouraging versus you building a team around yourself. You have this professional property manager, you have this professional lender, you have a CPA, and now you call this broker and you
And
talk about your team.
I mean, you mentioned track record. Those people that you mentioned, property manager, they may not own properties, but you can always partner up with someone who does own properties
You can.
just for their experience.
You
Um,
can. You don't
and
have to, but you can,
yeah,
you know.
and especially if I mean, if people are just getting started out and you want to take down bigger deals, I would say it's something that I wish I would have done is partnered with, find a deal, bring it, take it down, get it under contract, do the due diligence, and then find somebody who has experience in that, and bring
Mhm.
them on as an advisor for an equity position. And it's just something that I've heard done, and I feel like it would have benefited me. My own experience would have been enhanced had I
Mhm.
done something
Mhm.
like that. So I love that you said that. Um, so let's talk about the different inflection points in someone's journey when they want to get to 2,000 units, 5,000 units. You start out, as you mentioned, you're the do-it-yourselfer, you're the entrepreneur, you're going to be doing that first deal, whatever it is, the first flip, you're doing it yourself, you're taking all the hats on, you're doing accounting, you're doing acquisitions, you're doing property management, and then you start to want, you look at the horizon and you want to get bigger. What are the first, you already mentioned who, not how, what are the first roles that you start to look to fill, and people you start to connect with in order to get to that next level?
Yeah, so it really depends on where you are and what your mindset is. So let's start from scratch, right? If you have more of a scaling mindset from the beginning, you're going to act and behave differently than someone who does one deal, does another deal, then eventually does another deal, and so on, so on. Someone is more proactive and someone is more reactive. So if you want to be more proactive and you understand the fact that if you do one deal, you're going to do another deal, that you are actually starting and launching a multi-million-dollar business. That's unique individual. They're going to have a lot of advantage over someone who doesn't realize what they're doing. Even if they're doing on the side, they might think it's kind of a hobby or a side gig that may eventually, whatever, turn to something. So there's a difference in approach to this investing business. So the two people doing the first deal, they may have a completely different approach. So number one is your approach, your mindset. Recognizing that if you're going to get into the space, you are building a multi-million-dollar business that scales very rapidly. That's number one. Number two, you can see that mindset. Talking about the first position to fill is to hire a VA, right? A lot of people, they're not used to having a VA. Even anyone who has a W-2 job should strongly consider hiring a VA, even if you have to pay for it out of their pocket. I know it sounds wild, but if you look at the value of time and you look at the activities you're doing, if you're, let's say you're whatever, you're worth $60 an hour, right? And you hire someone at $15 an hour to do some task that frees up your time to do more $50, $60 worth an hour jobs, right? Makes you more productive. So as you're scaling your business, even if it's just you, yourself, and you should hire a VA because there's so many ticky-tack stuff that you shouldn't be doing.
Yeah.
So that's number one. And number two is talked about. So building your professional team because building your professionals around you, and then number two, looking for a joint venture partner. You brought it up, but I would be a little bit more intentional around that because in a syndication, for example, you're raising capital. I'm going to assume that we're raising capital. There's two roles. One is a deal finder, and one is the capital raiser. And it's not that you have experience with one necessarily. It's just the way your personality is, right? So if you've got hustle and you're really a numbers guy, you're maybe detail oriented, you're going to gravitate more naturally to a deal finder. On the other hand, if you have a relationship person, you have the gift of gab and spreadsheets make you break out in a cold sweat, you probably, from a personality perspective, would be more suited to raising capital. So the big mistake I see people making, not in our ecosystem, but in general, made that mistake. Try to make every mistake in the book so I can teach about it, is to do everything myself. So even though I can analyze deals and raise money, just because I can doesn't mean I should. So pick one of those two career tracks, pick one or the other, and then partner on the other one. Because 1 plus 1 is far greater than two. If you're one person in a partnership, all they're doing is talking to brokers and getting deal flow. That's their job. And the other person, all they're doing all day long is talking to investors. That's their job. You can do much larger, bigger deals faster. So it's a build your team, and then build your partners up. And then the third thing is really becoming clear on more of a 5-year plan, recognizing how much money you can make in this business, right? But that doesn't mean you should pocket all the money. No, how should you reinvest it? Yes, you should, but how? Right? How should you reinvest? Who should you actually bring on? Right? Well, I'm going to probably have to do some marketing at one point. Right? I'm going to have to do some investor relations. I'm going to have to do some asset management. Right? So that varies a little bit by the business, but a lot of people are not clear, number one, about the revenue they can make. There's no planning whatsoever. Therefore, there's no planning to actually reinvest in the business. And therefore, some syndicators scale very slowly because they don't do one or all of these things. And then conversely, some syndicators have scaled very rapidly because they've done all these things at the same time.
I love it. So your first step in your mind is you start with a VA. You find somebody who can take
Do that right now.
those
Yeah,
small
right now.
tasks, even if you don't have a business, just get
Hey, I'm
yourself a
business.
VA.
Yeah,
And
that's right.
I love that because it is amazing how um, I felt when I first hired my first VA, and I will say it is hard to find a good one. You say hire a VA, but there's a lot of bad ones out there, and that is going to be your first real step, real challenge is finding a good VA. But once you do, and you start to pass tasks off, your mind will kind of expand and you'll realize how many other tasks that you didn't originally think about can be passed off. And that just not having to spend the time to do those small menial things will just it is a night and day difference. So that is your first step: hire a VA and then build the team. Well, you mentioned build the team and partner. Find your partner. Um, do you do those? Would you recommend somebody do those simultaneously, or do you start with the partner and then build the team under that? Because you
I
only
always
have
build,
two
I'm
roles
sorry,
there.
there's 3 levels of team. There's a professional team around you, step number one, then your partner, step number two, and then your internal team as you get bigger. Because you need your external professional team for credibility.
Hmm.
So you need it before you talk to a broker, before you talk to investors, and of course, before you approach any kind of partners. But unless you have your own track record. Like once you have your own track record, it doesn't really matter. But I assuming that most people getting into commercial real estate don't have a commercial real estate track record. So how can they get one without having to do a deal? It's a chicken and egg problem.
Yeah, yeah. No, the chicken and egg thing. I feel like it is very true in real estate because I mean, even when you start, you need money, but you're trying to make money by getting into real estate. People always say you can do real estate with no money. I'm always like, that's bullshit. It's not possible. But I'm sure there are some ways. But you do definitely need money to do real estate. We are running down the time, but before we do, I want to talk about your own personal portfolio and what's on the horizon, what you guys see for investing in the future. So let's talk about the market today. What do you guys see and what are you guys excited about?
Yeah, well, we're excited about 25. 24 was didn't really leave too much to be left a lot to be desired for. It was definitely a year of turbulence and challenges as we were dealing with this incredibly rapid rise of interest rates and I would say anyone who has held real estate to some degree was affected to some degree or another, and we were no exception to that. We have gotten through it fairly well without defaulting on anything. Required some loan modifications to get through it, some capital call to get through it. And so we now have a more extended runway on that. So that's good. The other thing that hasn't been that good in the last 18 months is the ability to find deals, at least in multifamily. And so we're seeing a lot of these things shift now. Deal flow is starting to increase a little bit more where the sellers who are still caught up in 22 March of 22 pricing are now finally coming down a little bit if they want to sell. We're seeing a little more distress where people have to sell. We're seeing some of that. And then also, the economic headwinds have been easing. Interest rates have stabilized. They're slightly down, but I don't need them to go down necessarily. I just need them to stabilize because what happens is the reason the interest rates went up so quickly, yes, the cost of capital went up, but also the risk as far as lenders are concerned. So lenders pull back on their loan to value, their leverage. We
Yep.
were getting, 80%, 85% loan to cost in the day. Then it went down to 65% loan to value recently. And now it's already starting to come up a little bit. Now we're like at 75 loan to value, not loan to cost, you're not financing construction costs. So what I'm saying is the simple matter of fact that there's stability in interest rate market is actually increasing leverage, which increases prices, just that alone. So the big difference is that we're buying properties vastly different now than we were buying 2.5 years ago. 2.5 years ago, interest rates historical low, cap rates historical low, right? Leverage historical high. Okay, now exact interest rates prognosis down, right? Down. Cap rates prognosis down. Leverage very, very low and going up, right? So the pendulum has swung within 8 to 18 months from one market cycle to the next one. Meanwhile, the fundamentals for multifamily remain strong. And so the outlook, once the absorption happens from all the new stuff coming online this year and early next year, permits are down. So in late 25, 26, there's nothing coming out of the ground. And so that will continue making rents go up. And so we are long-term bullish. And I think we'll start seeing effects of that in late into 25.
Makes sense. That's funny that you mentioned like this year being a tough year. We bought a mobile home park in San Antonio, and we actually closed on it, I think, like a month and a half ago, 2 months ago. But getting a loan for that park was impossible. I
Yeah.
literally called like 70 something banks, just trying
Wow.
to get somebody to do a loan. We did end up finding somebody, but it was pulling teeth. People, it's just really hard to get deals done. But it sounds like you're projecting it to be a little bit easier going forward, so that's good. All right, so that does wrap us up on the first section. It's time to jump into the quick question round. Are you ready?
Ready?
All right. Starts with education, could be any form, could be a conference you've gone to, a mentorship program you've been a part of, book you read, movie you've seen, anything like that. But I need two recommendations, one for general life wisdom and then one for real estate.
Interesting. Yeah. So there's so many things that we can talk about here. So books, I think, let's see. One, oh my gosh, so many books. I read a book a month. So there's so many books that I could talk about here. Okay, Miracle Equation probably I don't know, popped in my head with Hal Elrod because it redefines goal setting in a way that makes much more sense to me. It talks about setting goals but removing the timeline or the deadline from it and instead committing to the outcome for as long as it takes. So I thought, that makes a lot of sense. For personal life, I really enjoy being part of Abundance. It's a mastermind for men and for women. It's not co-ed, but have two different things. And I really like the accountability and their holistic approach on life. They're very goal-oriented, extreme accountability, but they're focused on all areas of life. So not just how much money can I make, but also, hey, what's your health like? What's your relationships like? How are you developing your spirituality? So I've been doing that for a few years. So something like that really gets you around other people who are like-minded in general. Yeah, so that's kind of two things that stick out to me.
Cool. I love it. All right, next question is for your younger self. Let's go back to the Michael who was just getting started so many years ago. Go back to him, look him in the eye, give him one piece of advice moving forward.
Yeah, read Rich Dad Poor Dad sooner.
I'm going to put that in the bucket of get started sooner. We
Yeah,
kind of have a
number one, and the thing that was missing is the second book, which is I'd like to say I like people giving the purple book and then our yellow book because the purple book sets the mindset about passive income, and then our yellow book talks about syndicating and multifamily, right? So the first one doesn't really talk about strategy; it's more like a mindset philosophy, and you're left flailing around trying to figure out if I should flip houses and do rentals, which you should. Well, neither of those really. You really need to get into commercial, right? So you hand them the purple book, and then right afterwards, the yellow book or some other book like it that really talks about really scaling. The whole thing about scaling. If you're going to get into real estate, just do it right. Don't do it like everybody else does. Really, become a little more sophisticated. Ask some more questions, and figure out how you can get started sooner rather than later.
Yep, I love it. And yeah, we have a running tally on the show of the people that come on here and say they wish they got started sooner. I've stopped counting, but it used to be like 90-ish% of the people that came on said that. So whenever somebody says it, I always like to point it back to you, the listener. If you have not got started, or maybe you just did one deal and you're still kind of on the fence, this is a message directly to you. Everybody that is super successful, like Michael, who's been on the show, they all say they wish they got started sooner. So take this as a kick in the pants and go out there and get your first deal done. It is scary. It is going to be scary. There's no way around that, but you just got to pull the trigger and you got to get that deal done. And then it'll start, the ball will start to be rolling. So that's the message to you. And that moves us to the next question. This is about the US. It's a big place, big place. There is a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
Single metro. Well, I would have to say Atlanta because that's where we invest in. So it would be kind of sort of hypocritical for me to say something else. But there's a lot of good metros. We just happened to, years ago, we decided to, focus on Atlanta. The thing that Atlanta has, but Houston has it, Dallas, Austin. It's large enough to get deal flow. It's growing. Median income is rising. And so you want to be in that kind of environment.
There you go. All right, next question is about finding the deal. It all starts with getting in contact with the seller and penning that purchase agreement. So, what's your favorite way to generate leads and find new deals?
Brokers.
There you go.
Yeah, this thing that you described doesn't work so well in multifamily. It works great with mobile home parks. I know what you're doing. I know, Kevin Bupp and some other people are like, oh yeah, we're just cold calling people, we're texting people, we're getting deals done. I'm like, let me try that. No, it doesn't work. It doesn't work. So in our world, it's brokers.
Well, and I only recently kind of jumped on the broker bandwagon. I'd been the guy that's like, oh, I don't need brokers. I'll find them myself for the longest time, and it did work, but it takes a lot of effort. And this year I've just been like, you know what? I would rather just have a conversation with a broker and let them do the work.
Yeah, that's
They
right. There you
earn their
go.
commission
Who
for
not
sure.
how? Who not
Yeah.
how?
So the deal we're closing on at the end of this month that we actually came through a broker, and I'm sold. I'm no longer doing the off market stuff. I'm all about brokers these days. And I will say brokers, they brokers I feel like are the best source of off market deals. They do go to market eventually, but if you build those relationships, a lot of these brokers are finding their buyer before they even hit the market. Like they're reaching into their not Rolodex, but whatever the equivalent of a
You can
modern
still say
Rolodex
Rolodex.
is. Yeah, yeah. And they're talking to those people that they know are going to close. So if you become that person in their mind, they'll bring you those deals before they even, it even hits the market. All right, next question is about lessons learned. Not every deal we get into goes the way we expect it. In fact, most of the time something goes wrong and we get to learn a lesson. So what was the deal that went a little sideways for you? And then what was the lesson you pulled from it?
Yeah, don't do this yourself. It's stupid. And only saying because I'm super smart, okay? Super smart. I can do so many things. And my MO has always been to figure it out on my own, which is again stupid. So don't be stupid. Don't try to do this on your own. Build a team around your team professional, but also maybe get someone who's a little more experienced on your team somehow in some capacity, either in some kind of volunteer capacity or you got to pay for it. But don't do this alone because number one, you can make big mistakes, which I did on my first unit. I got away with it, but it was darn close. And had I had someone more experienced, they would have number one talked me out of going into DC because of the pro tenant laws. Number one. Number
Mm-hmm.
two, hired the wrong property manager. Number three, I didn't realize I had a professional tenant in there who was suing the previous owner, which they continued doing with me. Mistake, 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 suffering. Okay. So on the other hand, and then so not only do you avoid mistakes, but someone more experienced will expand your comfort zone and allow you to take advantage of opportunity faster as well. So for all those reasons, that's the biggest mistake is try to get help.
Yeah, absolutely. Don't go at your own. I feel like that's a big lesson to learn, especially for people who want, you have it in your blood that you just want to take control and do it all yourself. Don't. It's not worth it. It's going to be more of a headache than you think. So build that team. Do like all these other investors like Michael do, and build the team and rely on them. It's a lot more fun that way too. It's not very much fun doing it all on your own. And that leads us to the last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
Yeah, there's a couple of places you can find out more about me. If you're interested about getting into syndications in general and apartments specifically, we have a free training course. It's at Apartments called Apartments 101, creatively called.
Cool.
It's at apartments101.co, so .co, apartments101.co. And it's again, it doesn't cost anything except for your email. And then I might chase you around a little bit. But it's a free course. And the book is Financial Freedom with Real Estate. It's on Amazon. That's kind of maybe step two after that one because that's 250 pages, so it takes a little longer. And then just you can find me at themichaelblanc.com in general if you want to see all of our, we have YouTube and podcasts and things of that nature. So some resources for people.
Perfect. I will put those links in the show notes. So if you guys want to reach out to Michael or get involved in the apartments course, just click a little more, or yeah, the little more in the description. I said that right. Yeah, that will pull down the full description. In there, you can find all his links. So Michael, that wraps it up. Thank you very much for hopping on the show.
Thanks. Great being here, Gabe.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great week. Keep rocking real estate and Merry Christmas. We look forward to seeing you on the next episode.